Piramal Capital and Housing Finance is a subsidiary of Piramal Enterprises, an entity which is listed in the stock exchanges. Divan Housing Finance, which was acquired by Piramal Enterprises through the insolvency process, was merged with Piramal Finance. Today we have with us Jairam Sridharan, Managing Director of Piramal Capital and Housing Finance, to talk about the company's growth plans. Mr. Sridharan, welcome to the show.
Thank you, Manojit. Thanks for having me.
In the second quarter, the Piramal Enterprises posted a net loss of around 1,500 crore, mainly due to increasing provisioning for the DHFL assets. Is there a pain still left in the DHFL, or do you think the worst is over?
Um, Two quick comments. One is that a lot of the provisioning that you saw in the second quarter, actually that was unrelated to the Divan housing portfolio. It was related
Correct.
to our overall wholesale lending book, but it was unrelated to the Divan housing business. We had mentioned at that time that we have substantially recognized all the problems and have made the appropriate provisions. So nothing has happened to change that situation. We are, of course, the quarter has just ended and we have not yet declared our results. So I'll desist from making more specific comments on that. Our results are out in 2 to 3 weeks, and after that we can have more specific conversation on that. But I will say that nothing much has changed from what we said last on this topic.
The retail lending book of Piramal Enterprises was around 25,000 crore. I assume that is the size of the loan book of Piramal Finance, which you want to grow to 70,000 crore over the next 3 to 4 years. Will you be focusing only on housing, or there are other areas you would like to enter?
Yeah, there are, what we are thinking of, Manojit, is a multi-product retail lending business. So let's think of it as a diversified retail lending franchise rather than very specifically focused on one product. We are, of course, going to be heavy on affordable housing and on MSME lending. Those are going to be our two key anchor products around which we are going to build our business. The rest of the business, we plan to have a business around used car finance. We have a business on personal loans to salaried customers. We also have a microfinance business that we launched a few quarters ago. So there are going to be a few different businesses there. We also have a large digital lending business, which we originate ourselves, as well as originate through partners, fintechs, etc., which also forms a meaningful part of our business franchise. So there are multiple products here, both secured and unsecured. But together, our intention is to grow, as you rightly said, to about 70 odd thousand crores over the next 3 years. And over the next sort of 3 to 4 years, you should expect to see a business at the overall Piramal level, retail, wholesale, everything put together at roughly 1 lakh crores, with a little over 2/3 of that coming from retail and the rest coming from wholesale lending.
What kind of markets, geographies you are looking at, and what is the average ticket size you want to maintain for Piramal Finance?
So the big choice that we have made, Manojit, is that we want to be present in places where traditional big ticket banks are less present, and what we are calling the budget customer of Bharat. All right, you probably saw our customer campaign release yesterday, where we've spoken about the kind of customer that we are trying to address and the kind of value proposition that we want to create for them. So our intent is to address the lending needs of budget customers of Bharat. Now, those lending needs are smaller ticket than what you would expect in a large city, in a metro, etc. So that's precisely what we expect to see. In housing, you should expect a ticket size in the 14 to 17 lakh kind of range, depending on which market we are looking at. In MSME lending, if it's unsecured credit, we are probably looking at 5 lakhs or thereabouts, 5 to 6 lakhs as the average. If it's secured credit, you're probably looking at roughly 17, 18, 19 lakhs or thereabouts as the average ticket size. And if it's personal loans, you're probably looking at a ticket size of 4 lakh rupees, and similarly for used car loans, where again we are going to be looking at about 4 to 5 lakh rupees as the average ticket.
Piramal Capital Housing is a license given by NHB for housing finance. To undertake loans, consumer durables, MSME loans, do you need a separate approval from RBI, or you have already got that?
Yeah, that's a great question. See, our the listed entity, which is the owner of Piramal Capital and Housing Finance, is Piramal Enterprises. Piramal Enterprises Limited, which is the listed company on the stock exchange, is a registered NBFC now.
Correct.
As part of the demerger process, where we demerged our pharma business and moved it into a separate listed entity, as part of that process, we also sought and received license from RBI for the holding company to be an NBFC. So today we have both an NBFC and an HFC, and our intention is for housing businesses to be largely done in the housing finance company, and for non-housing finance businesses to be done in the NBFC entity, which raises the need for us to have one consolidated brand name to face the customer, because legal entity names might be different, but the brand through which we are servicing the customer, we want to have a unified brand, which is what we saw in our brand launch, where we released a customer-facing brand called Piramal Finance. Now, the Piramal Finance is not the name of a legal entity, but it is the customer-facing brand which could be serviced depending on the product type by either Piramal Capital and Housing Finance or by Piramal Enterprises.
Right. So the other loans, apart from housing loans, will be done from Piramal Enterprises, and your and Piramal Capital and Housing Finance will be only concentrating on housing loans, mainly affordable housing.
Yes, yes. So from a legal entity perspective, that's how the area of focus is going to be.
Now you have a very aggressive growth target to 70,000 crore in the next 3 to 4 years. Will you be open to inorganic opportunities for growth?
Yes, we are always open. See, as you mentioned in your opening remarks, we had a very large acquisition, one of the largest acquisitions in the financial services industry in the form of Divan Housing, which we completed last year in September. It has taken us this period to fully integrate all the pieces of DHFL into Piramal, and that's well and truly done now. We are operating as one company and very well integrated engine, so we are all in a good place. If you look at the history of the Piramal Group, you will see that over the last many decades, we have done tens of different kinds of acquisitions, right, in all our businesses. Piramal as a house has been quite active in the M&A world, and has created a lot of value for shareholders by strategic M&A action at the right times. That DNA we will continue to use. So we will continue to have focus on potential paths through which we can do some inorganic action, which can create value for our shareholders. So we are certainly open to that. There is nothing active that's going on right now that we need to talk about.
What is the medium to longer term roadmap? Is converting a bank to a bank is the final destination that is the group is having?
See, that depends a little bit on what the regulatory intent is on NBFCs, particularly large NBFCs. One of the things that we have all seen is that regulator has continued to make tighter and tighter, appropriately tighter and tighter regulation for large NBFCs, which create greater systemic risk, which is absolutely the right thing to do. Over time, the regulator has also expressed an interest to create more paths for on-tap bank licensing, etc., and a pathway to create more banks in our country. Now, our hope is that as we go through the next couple of years, we will see more clarity in terms of the regulatory stance on this issue. So we will be guided by that, and we will take actions in that regard. As you know, in India, NBFCs have existed for many decades, and continue to be profitable and fairly stable and sustainable business model. It is also arguable, however, that beyond a particular size threshold, it is better and more stable and sustainable to have a banking business model. We are quite happy to do either of those paths, depending on what the regulatory comfort is.
Because NBFCs face several challenges in the last few years. INFS crisis is one of them, when bank choked funding to NBFCs. So NBFCs has to perennially depend on banks for the fundings. So that is why I asked whether banking ambition is the final roadmap of your journey.
I think there is some merit to what you're saying, which that NBFCs as a business model basically are dependent on wholesale lending markets, right? Because we have borrowers in the wholesale lending market, and then we take that money and we lend it out on the other side, either to wholesale or to retail customers. That's the basic business model of an NBFC. And wholesale lending markets do tend to be a little bit capricious, And there can be times when they are going through some struggles or some challenges, which can create a life-threatening situation for NBFCs. And we have seen that liquidity side challenge happen in a few NBFCs in the last few years. And hence, from a long-term sustainability standpoint, having a more stable source of funding in the form of deposits, etc., does become very important for any large-scale NBFC.
In the recently released financial stability report, the RBI has flagged the risk of increasing borrowing costs for NBFCs. Have you seen your borrowing cost, your cost of funds going up in recent months because RBI has tightened increased the rates very sharply in the last 6 months, 8 months?
See, if you see our investor presentation for September end data, you will see that over the last 3 to 4 quarters, our cost of borrowing has come down. Our average cost of funds has come down, not gone up, and that has happened because our business has been changing. We have been becoming more and more granular as a business. The share of retail in our entire lending book has been increasing, and all those things are resulting in a more predictable book for us, which the lenders are rewarding with a lower cost of funds. So you essentially see our cost of funds actually move in the reverse direction of where the market has been in these last few quarters. It might not necessarily continue in the quarters to come. However, we feel pretty confident about the stability of our funding situation. As of today, roughly 3/4 of our liabilities are fixed in terms of rate structure, and only 1/4 is variable, which means that the impact of rising rates doesn't show up on our books quickly, and it'll take a while for it to show up. So we are fairly sanguine about the rate environment for the next few quarters.
Is there a plan to diversify the fundraising requirement, like away from banks to the more retail NCDs and all? Is there
Yeah, so we that's a good point. We do want to always have very diversified sources of funding. Banks have been our predominant borrowing path for the last few years, and that said, we have also done some retail NCD issues. Both last year, last year, this year has just started. So yes, we will continue to do that. You'll continue to see us active in market. I have nothing specific to talk about here. We do have a board meeting coming up in 3 weeks, where funding requirements, etc., among other things, might get discussed. So we will see on the other side of that if there is anything that needs to be disclosed to the public.
Mr. Sridharan, as always, it was a pleasure talking to you. Thank you so much for speaking to Business Standard.
Thank you so much for sharing and giving me this opportunity. Have a very good day.
Thank you, sir. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.